All right. Good afternoon, everybody. Hope you're all well. Welcome to the webinar for today. Good to see everybody. Just spend a minute here. I'm Dan Sheridan, Sheridan Mentoring. Glad to have you. Welcome. Just let you know, today launches right after this webinar will be our annual Thanksgiving sale, which is 25% on all online classes. And then this year, what we added is, if you order, so you go in there and you buy a class, and you buy another class, you buy two classes, you will be registered and you will get free as a special bonus our new upcoming live 3-week class that starts a week from Tuesday. And I'll give you a little more information on what that class is today. But that's the rundown. So if you just go to the front page of Sheridan Mentoring and you click on our big banner below, that will bring up our online options trading classes, and you can just scroll down and you can see here's our, on the right side will be strategy classes on demand, and they'll tell you how many weeks those are. If it says 3 weeks, it's going to be 6 classes. If it's 4 weeks, it'll be 8 classes, because we usually do 2 a week. So strategies on this way, on this side. On the left side will be more kind of the portfolio classes. And you can see that we've done through, so that should be helpful to you. And so when you go to the check-in, it will give you, auto do the 25%. These aren't the discounted prices. And so once you, again, buy 2 classes, you will get as a bonus free the new class that'll be a week from Tuesday, our last class of the year, which is going to be a good one. And that will be Dan's 3 strategy. Mark Fenton will be helping me with the class as usual. Our 3 strategy, kind of three-headed monster trading plan for the new year, featuring the new DLD trading system, double long diagonal. It's an exciting strategy. I might preview it a little bit today. That gives you no risk on the downside. That's a long Vega trade, gives you no risk on the downside, a lot of room on the upside. So for people who have a busy schedule and don't want to mess with it as much, this is a good strategy. And that will be a bonus when you join the class. So excited about the big Thanksgiving special. So let's take a look for a little bit here on the market. And you can see here, we've kind of been range bound the last week, right? Pretty range bound after this big run up. We're still in an uptrend, a little more range bound. SPX is 35.73 today. And the highs have been 36.45. So right now we're about 36.45. We're about 60, 70 points off the high. The VIX is 22.58. The range the last 4 months has basically been 22.35. So that's still the range. And that helps. That helps determine when we do certain strategies, right? That's the range. When would we go out of that range? Well, if we go up towards 36.45 and we break through there, right? 36.45, then I think we'll get a lower range, maybe 20, 20 or possibly 18. If we really go through there, I would lower it, and 30 on the upside. But if we don't hold there and we go down and we start going down this lower level, 32.50, under 3,300 right there, then we're going to be knocking on the door of the upper end of the range here. We might even adjust our volatilities a little higher. But so right now, this is still holding, kind of, do more long Vega when we're at the lower end of the range, a little more short Vega when we're near the higher. But again, the biggest thing is, I always say, what do we need for range-bound trades? We need some type of a range, right? And we're getting a bit of a range here after this, a little choppier, a little bit of a range. And the ATR, whoa, Dan, what's the ATR? ATR is just, if you take, it measures on these price candles. You can see when we were having the big correction in February, these big price candles. That just means ATR is taking the high and the low of the day in SPX and telling you how wide a range it is. And when things are really going down fast, you have these wide ranges. And any day you have wide ranges, it can make managing these range-bound trades a little more difficult. So we like the ATR. I use this ATR, 8-day Wilders in TD. As long as it's trending down and we have a bit of a range, game on. For our range-bound stuff, like iron condors, butterflies, calendars, put credit spreads, etc., etc., etc. So in the class that we'll be starting a week from Tuesday, just going over a couple of the, just showing you a couple, what we're going to do is we're going to put together a working portfolio and do it with you for 3 weeks. This will be great for the end of the year. It'll be great for next year. And kind of a neutral Vega portfolio. You're not going to be too much long, too short. It'll be a combination of 3 trades. And in one of the trades, we're going to be talking a lot about this double long diagonal in class, but you could substitute it for a calendar. It's a long Vega trade. So let's start with one of the key trades in this 3-headed monster portfolio, which, you know, I kind of designed it that way to be easy to manage. Gives you a lot of room on a lot of these trades, but pretty Vega neutral. And going out just a little bit further on the durations, not too far. And I think you'll like it. And we're going to actually do it for 3 weeks, so you'll get practice with it. But at least give you a glimpse of it today. And the first trade would be kind of an easy trade. It would be, you know, that people are used to verticals. How many do like put credit spreads? How many of you do put credit spreads? And again, this portfolio is, I've got it designed for a $5,000 portfolio, but if your options portfolio is 100 grand or 200, whatever the number, you could just multiply it, right? So it's really a three trade portfolio, I think, which would be perfect. Vega neutral. I'm diversifying the duration. I'm not going too far out, but not like 1 week out. So I think this would be very manageable for beginners and very helpful for veterans. So first one would be like a 3-week put credit spread, which we do with regularity. The trade I'll be doing be like a 20 wide put credit spread in SPX, and that'd be about $1,700. So on a 5K portfolio, I'm going to do 3 trades all around that 1,700 range. And again, you could do some swapping, but the idea is to give trades like a put credit spread. You don't have any risk in the upside, no risk if it sits, and you have decent amount of room on the downside. It'd take quite a move on the downside for you to get in trouble. So we're going to talk a lot about that, a lot of the risk management with it, and then we're going to do it. We're going to do these 3 trades every week. So make sure you know how to do it, because, you know, when you're starting out doing something like this, you don't know what you don't know, right? You do it on your own. What about this? What about? So that's what we're going to do, is go over the details. So the first one would be a put credit spread. I think we have a pretty good methodology for doing these, and it works pretty well. The second trade in our 3-headed monster, diversifying risk, diversifying duration, diversifying strategy, that all went into constructing this. And so here's going to be more like a 30-day butterfly. And what's nice about this, get another trade that, again, just like the put credit spread, they're easier to manage because you only have risk in one direction, but you still got a lot of room if it does go down. And here's similar would be I'm going to call this a broken wing butterfly that I set up in the calls. Here's an example of this one, just to let you see. So we're in the December 18. So this is going to be as far as the put credit spread I just did would be 2 weeks out. That's what we'll be teaching that. And then this butterfly will be almost 30 days out. This will be around, with DC 18 would be 28 days. So near 30 days on the butterfly, 2 weeks on the put credit spread. And this would be the trade, an example of it. And we'll show you different versions of it, but buy one, sell two, buy one. I'm in the DC 18 expiration. These are calls. And the strike that I'm going to buy, again, SPX right now is at 35.73. So this will be a graph of it when you start, so you can see the blue line is expiration. The purple line is today. So you can see it's a relatively neutral trade, which is great. It's a neutral trade. It's just we have less risk on the upside, more risk on the downside, pretty flat curve, and pretty neutral. To me, neutrality, delta neutral, would be plus or minus 1 or 2 deltas long or short. And so we're going to buy an in the money call, 3,500. Then what we're going to do is sell the 35.60s, a little bit under where the price is trading, and then we're going to sell a out of the money 36.05 call. So in this particular example, you can see this is called a broken wing butterfly or unbalanced. And I'll explain that. The short strike on the credit spread will be 35.60. So we're starting at a little bit under where the current price is. So why is it unbalanced? Well, the distance between the short strike and the in the money call, the lower strike call, is 60. The distance between my short and my upper strike call is 45. So when you have different widths there, it's called broken wing or balanced. If both distances from the short to each of the long calls was the same, that would be called a balanced butterfly. Did I do broken wing or an unbalanced? What was my purpose? To get the position deltas near zero, or delta neutral on a $3,500 vehicle like SPX would be up or down 1. And again, I did it one contract because that the margin or risk is $1,700 on the downside. So the put credit spread was about $1,700. The butterfly is about $1,700, and this is short Vega. So the put credit spread and the butterfly benefit of volatility goes down, and now we're going to neutralize that from a volatility point of view with our long Vega trade. And here's I'll start with the calendar. So for the long Vega trade in the portfolio that we're going to trade is you can do a calendar or a double diagonal, and we'll do both for those. Again, we just want to make it about $1,500 to $1,800 for that side. And if you're bigger, you can just multiply it. If you want to do, instead of $5,000, $50,000, just multiply my numbers by 10, right? If you want to, or if you want to do $100,000 instead of 5, multiply it times 20, right? So here would be an at the money calendar. Let me just put it at the money. And in this example, what I'm doing is I'm buying. And what's nice about this is it's easy. We'll set you up, you know, Tuesday you do this trade, Wednesday this trade, Thursday this trade. And so it's pretty disciplined doing it. And what's nice is with the 3 weeks, if you come along with us, we're going to do it for you all 3 weeks live. So which would be crucial if you actually wanted to do it. If you think you're going to do it just from watching this for 10 minutes or 20, good luck, right? Because there's a lot of, you know, going to be hundreds and hundreds of details and questions. We'll work through it. And again, we're trying to give you a very simple methodology, but you got to understand this calendar. We buy one December 9. So again, diversifying the duration more. Our put credit spread was 21 days. Our butterfly was about 30 days. Now the calendar, about 15 days. So we're diversifying duration. We're diversifying our volatility risk and buying one. And we're diversifying our price risk because we have some with no risk on the upside, some with no risk on the downside. I'm going to show you one in a second. But buy one December 9, sell one December 4. So in this particular trade, I'm 4 days between my long and the short, and I'm buying the 35.70 calls at the money. And it's going for around $7.90 debit. So we could do a couple of these, right? We want to use $1,600, correct? For a $5,000 portfolio, dividing it by 3 trades. And that's what's nice about your calendar trade. Here's the underlying. And what we're looking at is we're managing the trade. We're looking for our profit between this area. And as we get, here's kind of the gates of the kingdom, the gates of the profit area here. And once it hits these outer gates here, we're going to show you how to adjust it or how to take it off, what we would do. But anything in here, we just wait for a profit. So it's nice change of pace versus a spec trade. You need it to move here. You start out making money until it moves too much. But again, we'll show you the risk management. And then if you like the calendar, and we'll be trading that side by side by, we're excited about a new trade created in the Sheridan mentoring. Mainly Mark Fenton head up the research and finding on this, and double long diagonal. And so we constructed a trade that has no risk on the downside. All right. And on the upside, if you look, I've got these price slices set for 3% up and down. So you could see, 3% is a big move, right? 3% takes you out to here. You don't lose anything. So we constructed it for someone who's busy and that doesn't want to have to mess with this all the time. And so no risk on the downside. The put credit spread and the butterfly have no risk basically on the upside, and the put the butterfly very little. But you can see here the way we construct this. It's just great. You got a lot of room. Your Greeks, pretty neutral delta, positive theta, and long Vega. And so I'll show you some tweaks we've come up with even in the last week to deal with the volatility. But I think it's a great trade for people. Just, in this schizo market, we could be down 100 points or whatever, but zero risk on the downside. So we're excited to launch the new class a week from Tuesday. It'll be very methodical. It's great. You get the plan, which we're going to implement just 3 trades. We're going to do it very methodically each week with you. Very simple risk management. No craziness. And that double long diagonal, which is basically you don't do anything. The risk management is very easy. And we'll show you these. We're excited to kind of introduce this new system that we've come up with this trade. So I'm excited about the new class. Again, you go to the front page. If you can just buy the new class by itself, or if you'd like it free, if you get 2 of the online classes. So appreciate it. If you have any questions about the classes or anything, send me an email, dan@sheridanmentoring.com. Otherwise, have a great Thanksgiving, and we'll see you guys ready to roar, right? And we'll be trading this portfolio live starting a week from next Tuesday. So thanks again, everybody. Appreciate it. And go from there. As far as the classes, this is recorded. All the classes we'll be doing will be live classes. They'll be live, but they'll be recorded. And if you watch it recorded, there's a web page. You can ask me questions, get the slides for the class, the PowerPoints, and you can ask questions even months after the class. So thanks everybody so much. Bye-bye.